Mahindra Lifespaces has been steadily increasing its presence across the country. One of the early movers in the affordable housing segment. The developer has seen its revenues double over the last financial. But what could be a spanner in the works is that the Maharashtra government's decision to hike stamp duty from 6% to 7%. That's not good news for a player which gets a majority of its revenues from Maharashtra. So how does Mahindra Lifespace, and rather, how's it bracing for this particular knock, and how big an impact will this be? Let's ask the Managing Director and CEO, Sangeeta Prasad. Ms. Prasad, thanks very much for taking out the time. Let's start off with that very question with regards to the increment of stamp duty within Maharashtra from 6 to 7%. What is the likely impact for Mahindra Lifespaces?
Yes, that came as a surprise to us. But as I look back and reflect, I think it is meant for the larger and the longer good. Any kind of duty addition in the market does have a short-term impact. People do look at it negatively. But I think with the market and our end-user focus, we should be able to attract the right customers. And in the long run, it will do good for the state.
Nonetheless, Ms. Prasad, is that, when you talk about, short-term speed bumps, to actually converting those interested clients and making them go ahead and purchase those houses, the incremental cost, do you think is going to be that much more for them to sit on the sidelines and instead convert their purchases?
You know what, in the last 1 year, Mumbai has had a different issue, which is the DP34. I look forward to the resolution of the issues related to the DP34, the transition policy, because many of us developers, responsible people like us are waiting to launch, and many customers are waiting for a product. As you know, the market has seen a paradigm shift. Responsible developers like us will get the right clients because they believe that they will get their product and their home at the right time, at the right price. So I do not see that as a long-term or a medium-term impact. Of course, as I said earlier, any duty which comes into the market does create its short-term and immediate-term dent. But I'm more interested in the resolution in the transition policy and the DP34, get our launches, go to the market. And I always think in this large country of ours, when there are so many people wanting to buy homes, people like us always have a place under the sun.
Right. While we've been talking about the slightly low-cost housing and the more affordable housing spaces, you've also made your foray into, the launch of high-value projects in Mumbai, particularly. You had a recent launch in Kandivali. Do you see that getting materially impacted? Because obviously now, if it's a high-value project, the increase in stamp duty pinches that much more.
You are very right. Any increase in any duty does pinch, and customers do come back to us and tell us what we can do about it. So we follow a very rational, logical approach. We look at the customer, we look at the market, and look at our pricing, and that's how we face the market. Incidentally, the product you are talking of has very little inventory, so I am not seeing that as a very big dent. But of course, it is a dent on the customer's pocket, and whatever we can do to alleviate that dent, we will surely do, keeping in our market considerations.
What's your plan for Mumbai? Are you expecting to, make it a big market for yourself?
I think I will just step back a little and talk about what's happening in the real estate sector, and therefore on what's our plan for Mumbai. I think that the last couple of years, this sector has undergone a cataclysmic shift, if I may say, with all the regulations converging towards transparency and symmetry in the market. And if you ask me, this is the right time for us to win and grow. So I see Mumbai being a very, very important market for us, apart from Pune and Bangalore. With these market focus and with our current aspiration and opportunity for growing, with the reliance of the customer on our products, I see these markets becoming really fulfilling for us in our journey ahead.
But would it be just enough to focus on these three cities, Mumbai, Bangalore and Pune, or a bigger diversification into the tier 2 cities also is something that you're going to be focusing on actively to make sure that the revenues keep coming in?
So that is the balance in real estate. Real estate is a very micro market and a detail oriented business. And with our denominator at this point of time not being very large, I think these three cities as a priority one market, and the other two cities which regions we are looking at, NCR and Hyderabad, would be able to fulfill our aspirations for profitable growth. And we have the Happinest brand as well, which will bring in the volumes, and I think the volume value combination of the two brands and keeping the customer focus will help us fulfill our aspirations for growth. I am confident of that.
Okay, could you throw some light on the numbers and the expectations thereof? What do these translate into while you're going big on these particular cities and you're planning in the right direction, but from a shareholder perspective, it needs to translate into numbers?
You are very right. That's the whole focus. But we don't give forward-looking numbers. But I would like to assure our shareholders through this forum, it is a very ambitious and exciting journey. But the two factors which help this real estate market are resilience and patience. And I am confident with my team, we will be working towards fulfilling the shareholders' reliability on us.
Okay, let's talk a little bit more, about what's been happening in terms of the current liquidity scenario in the market, and whether or not Mahindra Lifespace is facing any sort of a liquidity crunch with regards to the flow of money from NBFCs, and what's the exposure there?
Yes, the NBFC liquidity stress has created issues in the real estate market because many of the real estate developers have hitherto been financed by the NBFC source. So it has impacted quite a few, leading to a lot of stress in the market. Personally, for us, we are very, very cautiously funded through the right routes. It has not impacted us as a developer, but many of our customers have also got impacted, especially in the Happinest segment. But I just want to assure you that we have been talking to our customers and we are finding out sources so that they are also not hampered anyway. And that is the power of the Mahindra brand, because the other sources of finance do look at us and finance our customers. So that's the current system, but there is stress, and I think in that stress there's an opportunity for people like us. Can we look at some of those stressed assets and look at it prudently and judiciously and take over some of those assets? That's one area we are focusing on, and hopefully in the near future, if things pan out well, through our due diligence and evaluation, we'll have some of those products in the market where we'll give good products in the market by a responsible way of practices.
The servicing right now is not a big issue for you, interest servicing?
No.
Okay, you're comfortable with that. But from quarter 1 to quarter 2, there was a slight marginal increase in interest cost. Is that of significance, or that is a normal course of business?
So of course the overall interest scenario, as you know, has hardened in the last few months, and any hardening happens, it obviously impacts you. But at this point of time, with our kind of access to capital and our strength of our brand, we do not see that as an impact. But obviously we have to keep our eyes and ears open and see that we do our business well, but not an indelible impact for sure at this juncture.
Okay, is there a need for additional funds for upcoming projects right now, and what are the source streams for the same?
We would love to actually fund our projects both through internal income as well as through the various funding sources, because the idea is to grow. And if you look at our debt equity situation, we have enough opportunity. So that's one, we can leverage further. But we also have a lot of people who are interested in partnering in JVs with us. So we are evaluating that opportunity where we can go to the market together and yet not overstress our funding capabilities. So I see that as an opportunity and not as a constraint at all.
So there's no immediate requirement for funds?
Of course, we are evaluating lands, dear. So when you evaluate lands and you need to pay the landowner, we have a requirement for funds, but it is not a constraint. We have availability as well.
Just one last question from my side.
Because I would be foolish if I do not fulfill. Yes.
Yeah, no, go ahead. Finish your point.
Yes, please. No, I'm just saying I just want to reiterate that it would be foolish on our part when we have all the opportunities and the right to win. We do not go ahead and fund ourselves prudently and fulfill our growth aspirations.
Okay, so when you're talking about these opportunities, I keep coming back to, probably if you could throw some more color on how big these opportunities are.
These are opportunities in the markets of our choice, which I explained to you earlier. So you know these markets, and those opportunities would be, I do not know what you mean by big. The opportunities are very credible and would help us expand our footprint in these markets.
All right.
Sangeeta, I just have one question. I know you mentioned that you would use this forum to assure our shareholders that you will do your best to grow. I'm just trying to get a sense from you as to what's the quantum of growth could be for companies like yours, because typically a large company would grow a few percentage points higher than what the industry growth rate would be. If you can't quite mention explicitly what your growth numbers could look like, can you tell us what's the CAGR growth for the industry that you anticipate over the course of the next 3 or 4 years?
You see, the industry is growing through a very, very different way. There will be, first of all, consolidation. So it would be foolish on my part to give a percentage or a scale. But I see a few developers would become major and very, very important in the scheme of things. The fragmentation will reduce. There will be top 10, top 20, top 30 developers who will actually own the market, give products to the customers, and the customers will be end users. So with that two variables shifting, there will be a consolidation, not leading to unprecedented growth, but very good growth in the market for relevant players. So that's how I would leave it, because the two variables are too difficult for me to predict. But I surely see growth for responsible players in the market, thanks to the consolidation and thanks to the end users buying. The comforting part in this business is people are being born every day, and homes are still the most important things in the lives of Indians. So people will buy, and the right people will buy from the right developers.
Yeah, I agree, Sangeeta. But it's something that we've heard all through these years, right? Right from Arun Nanda to otherwise, and from some of your peers as well. And some of the companies, and you in particular, have grown a little bit. The question mark only is that even if you can't predict for the industry at large, even if we say that the growth rates would be more stable for the top 20 or top 30 players, is there some number, some arithmetic that you can leave us with?
I think I should meet you separately and work out the arithmetic with your guidance.
Oh, well, with my guidance, I don't know. Maybe with my questioning and probing, maybe we can arrive at a number. Your guidance and my probing.
Yes,
maybe
you
that's
go
the way
on
it will
probing me. It will help me to do some arithmetic.
Well, maybe that's the
case. It will
case.
be always welcome. Let's catch up soon.
Would be lovely to do that. But Sangeeta, thank you so much for taking the time out and being with us today. Appreciate your candor and appreciate your time today.
Thank you so much as well.